Well,
I love it.
cool.
I love it. Well, we will
Mhm.
get started. It's a little bit after 8, and I know everyone's time is valuable. So, thank you guys for being here. Those of you who are live, it's always great to have a little bit of an audience. This recording will actually go out to about 420 people on an email list as well, and it'll get posted to my YouTube channel. So, hopefully some of the participants tonight will have some great questions for you guys and learn a lot and have something to take away from it. But at the same time, we hope that the message will continue to be shared once the email goes out, once the video is live on YouTube and things like that. So without further ado, so I am Beth McLaughlin McDonald. For those of you who don't know who I am, I hold Private Money Mondays every other Monday night at 8 p.m. Eastern, just to have conversations with people, with mostly women in the real estate space, in the investing space. I started out as a private money lender and found quickly that once a borrower has your funds, they don't seem to be real engaged. And I call it customer service. It seems like the easiest part of the process. But unfortunately, I was finding that, getting updates and feeling comfortable with someone having my funds wasn't exactly what I had expected it to be, even though I went into the deal saying, here's my money. Use my money, let's build a relationship, and it's yours to continue to use, rinse and repeat, make my life easier, make your life easier. And it just still, like I said, didn't happen. And after experiencing that, I decided I would start reaching out to some borrowers. Found out that borrowers actually are super busy, which we all know, but at the same time, really didn't have systems in place to have those follow up and those touch points with their lenders. It was like, oh, got the money, and then full speed ahead. So they're working with attorneys, they're working with general contractors, they're working with, all these people for the deal to get the actual fix and flip done or the buy and hold done. But what they were forgetting was taking care of the relationships that helped them get the funds to have the project in the first place. So once I realized there was a little bit of a disconnect there, not, it wasn't just me. I started reaching out to people who were also lenders and wanted to find out, like, hey, are you experiencing this same thing? And I found out they were. I spoke to one lady, and she was a lender on a deal that was a 6 month deal. And the day before maturity, her lender, or excuse me, her borrower reached out and said, oh, by the way, I need to have a 90-day extension. All these things had happened. And yet that was the first communication that that lender had received during the entire deal. And it's just not okay to expect people to give you their hard-earned funds and then have no relationship there, no follow-up, no touching points and things like that. So I have 35 years of corporate America, operations, workflows, checks and balances, simplifying systems. So I thought, what can I do? Where can I add value? Where can I simplify things? So again, we create this rinse and repeat process so that the same lenders and the same borrowers can keep working together and grow either their portfolio or the money that they're using to invest with. And that's kind of how I got into this consulting space. I was connecting people before I knew that there was a connector role. So that's kind of how I ended up here. In 2025, I did just about $10 million in revenue. Women supporting women. Probably 90% of those deals were women who had funds, who wanted to grow their funds, weren't ready to do a buy and hold or their own project, but they needed their money to grow. And there were borrowers who needed to grow their portfolio and needed those funds. So through those connections, through these calls, we were able to raise that amount of money. And slowly but surely, those deals are starting to get paid back. People are starting to get out. So we're looking at getting to that point where we are going to truly rinse and repeat with some of those same borrowers, same lenders. So it's been a really exciting time, lots of growth, lots of hard lessons. I'm not going to make everybody think that this is easy breezy. It's not. I am actually in the process of having a company build out a website, a CRM, and a portal that will actually be a borrower and lender portal where all of the things, all of the communication, all of the checks and balances, all of the documents, all of the images, all of the pitch decks will live in this portal for both the borrowers and the lenders. So there, everything is in one place at all times. So instead of a deed of trust getting text messaged out to a group of 5 lenders, it's in the portal. So a pitch deck, it's in the portal. All of those things built off of profiles for both the borrowers and the lenders. So I've been saying for 3 months that it's 30 days out, 30 days out. I had a call today with the owner of the company, and I think we really are probably about 2 weeks out. So I'm super excited about that. It'll hold me more accountable. At the same time, it's going to really start adding like kind of some bonus ownership for both the borrowers and the lenders. So I'm super excited about that. All that said, tonight is not about me. It is about another exciting project that I'm partnered with and excited to bring to you guys again as a consultant and a connector. And I am going to start with Robin. I think she's still here. There she
Yeah.
is. I know you went off camera for just a second, but I'm going to pin you. Um, so Robin and I have been working together for probably 7, 8 months. And we have talked through project after project after project. And this one I'm super excited about. I'm going to let her do a little bit of an introduction. We are missing one of the partners out of the 4. I have a video that she created because she's on vacation with family. It is about 10 minutes. So I'm going to play just like a 2-minute piece of the video, let her do a little bit of an introduction, and then I'll either let Robin kind of talk through what her role is going to be, or, Chris, whoever wants to talk through a little bit about what her role is. I'll include her entire 10-minute video in the follow-up email with this recording, but I just want you to see her, kind of hear her brief introduction. But Robin, we'll start with you, and then we'll go to Lindsay, and then we'll kick back to Chris and team.
Okay. I'm Robin, and I have my experiences in operations and sales and marketing and customer service in casino. Mainly been in a casino role, but I've owned and operated several small businesses in the past: flower shop, massage therapy, med spa, pharmacy, um, interior design. They've all here and there. The long span of my training and development has been in the casino world, operations and hospitality, and I am retiring from that this month. So for the last year, I've been more focused back in businesses and real estate investing, and met Chris and Mary. We hit it off right away. Then met Lindsay, and we all just kind of aligned. And Chris and Mary had a vision for this Halo Living is the name of this tiny home company, this business that we're wanting to do, and to be a tiny home dealership and be an avenue for affordable living, affordable housing. So it's kind of a hybrid setup. I'll let Chris go into a little bit more of that, but we're going to offer a dealership role and then on-site building also. And then that kind of goes into Lindsay's role too. They just kind of waterfall into each other. We overlap a little bit. And Mary and I will be working a lot together with sales and keeping things done behind the scenes. And Chris can be hands-on and get his hands into stuff. That's what he likes to do. So that's a little bit about me and how we all kind of met. And if you want to go into Lindsay and I can backtrack, or let me explain what Lindsay's role is first, or do you want
Yeah, if you
her
want
to
to,
get
yeah,
off
you
it?
want to do that, and then we'll just do a brief, we'll show her video just briefly. So yeah, if you want to talk about Lindsay's role a little bit.
Lindsay's the number one wedding consultant in the nation. She's the one that started wedding consulting in the nation in the United States. So she is very well versed and a very good businesswoman in that she kind of owns her space on that. Um, I hit it off with her right away and instantly thought, okay, there's a need. She kept mentioning to us there's a need in all of her wedding venues that people wanted to either build on site or they wanted tiny homes or cabins or villas on there as part of their um, the revenue streams of what they bring. Because a lot of these places are rural, wedding venues are, and there's nowhere for the wedding party or a few, the wedding guests that are friends and family that's not in the wedding party for them to stay. So more and more they're starting to build out these places for them to stay. And then if they drink or party, there that's at weddings, then obviously you don't want to be on the road. So you can offer, amenities for them to stay on site. So some of these they will want to build on site, which Chris, I can let Chris explain. He'll work with Lindsay in tandem on that really tight. So, and then some will just want, to order and customize their homes through the dealership side. But that's her vertical, her lane that she stays in, and she's going to be a big part of Halo Living because of that.
I love it. And I got to meet her last week
Mhm.
when we were all just kind of, meeting each other and talking through everything and everybody's role. She's a doll, and I had no idea. Like she didn't sell herself. Like, I
I
mean,
know.
to the level of what she's capable of and what she's accomplished. I
Mhm.
learned more about her talking to you, Robin, just for a few minutes. And I was like, oh my gosh, like she's just like laid back and like, yeah, I was the first person in the United States to do this. And now it's, she has this amazing company and consulting business. But I love that this like the tiny homes are tying into something that she's already doing. So she's
Yeah.
helping, create these spaces for these events, and now
Mhm.
to have that extra layer of providing housing on site as well. It just makes so much sense for her to progress, and it makes so much more sense to partner with someone who's already getting into that manufacturing space and or sales space to provide it. So like I said, I'm just going to do a quick, let me share my screen, just do a quick intro with Lindsay. Hopefully you guys will be able to hear her video. So I know.
Hi there, my name is Lindsay Lucas, and I am a nationally recognized wedding venue consultant and business strategist. Apologies for not being able to make it to the meeting today. However, I hope this video suffices. If anyone would like to reach out to me independently, I'm happy to entertain one-on-one conversations. If anyone would like to get to know me a little bit more, fire any questions that you have about me, happy to answer any of them. A little about my history in the wedding industry, very, very niche, I understand. But I actually got started as a wedding planner back in 2008. I built a firm with several associates underneath me and grew that to be pretty successful within our local Houston market here. From there, that kind of grew, and we were asked by a lot of local venues to provide in-house coordination specifically for all of their couples, which, as you can imagine, grew that business as well. Through that, I built really close relationships with some of the more high-end wedding venues in particular that requested that I personally be their venue manager. At that point, that's when I really fell in love with wedding venues themselves, saw a massive gap in the market, and that things could be ran a little bit more efficiently in order to be more profitable for the owners themselves. Back in 2016, there was a massive boom in the Houston area of a lot of barn venues getting started. I had built wonderful friendships with a lot of local vendors, like photographers, caterers, DJs, things like that. And the nature of the beast is when a new venue pops up, all of those vendors go and bang down their door trying to earn their business. I had a different approach. I built friendships with those vendors. And when those venues had questions, how do I do this? I have this problem. How do I answer this question from a bride? The vendors didn't necessarily know how to answer it, but they knew that I was always happy to contribute. And so they started referring those new venues to me. I would go on site, and at that point, they requested me instead of me banging down their door like most of the vendors did. And that was their approach, which was great. Not necessarily my approach. And so I would wait to be asked and invited to come on site. I would come on site, answer all of their questions, spend hours with them. And then I would offer to do their first wedding for free so that our team could come in, manage the event, give them a really great client experience on behalf of the venue, which made the venue look really, really great in the client's eyes. So, and then that also freed up the venue owners to worry about all the behind the scene things that they wouldn't have time to do, like are our toilets flushing appropriately? Are our sewer lines clear from construction debris? Things like that. From there, I never wanted to ask a venue to be on their preferred list, but after hosting and taking that burden off of their hands within that first wedding, I was always asked 100% of the time if I would be their in-house coordination team.
Okay. So that was 3 minutes out of almost her 10-minute spiel. So I hate to not play the whole thing because she does have an amazing story, but hopefully between Robin and I, and now Chris and Mary can certainly put in their 2 cents as well, and kind of tie all the pieces together. So let me find, there you guys
And
are.
Lindsay doesn't talk that fast.
I know. I have it
Shut
on
up.
1.2. I bumped it up just a little bit,
That was good.
just to get as much as I could, squeeze as much as I could in. So yeah, when I send it out, it'll be the normal at the normal level. So thank you for adding that, Robin. I forgot. All righty, Mary and Chris, you guys are up. If you want to do a brief like an introduction, who you guys are, where you are, how you got to where you are now, and then pull the four of you together for us.
Sure. So my name's Chris,
Mary.
and this is Mary. It's probably my better half. So I started my construction company, or I've been in general construction since 2012. I had sales background before that. I was in sales, I had a sales position for 8 years prior to that, several different sales positions. Started a construction company in 2012 and started with high-end residential. So I'm familiar with more of luxurious type finishes on the residential side. And 4 years ago, I went into commercial. So we do ground up commercial and primary kind of light, light commercial, retail, medical centers, things like that. I don't do multi-story high rises or any construction like that, but primarily retail and 40, 50,000 square feet type structures in that space. But since COVID, the market's kind of changed. So I wanted to start something new where I could still bring a lot more of a luxury. My vision with the tiny homes was to go after a luxurious type tiny home and go after a market that I feel like is kind of untouched, and not really. And the ones that do it, I don't feel like it's executed very well. So my goal was to go out and start a tiny home company that could offer high end finishes in a small footprint at a reasonable price. Um, and where our partnership with Lindsay really kind of struck me in the right way was wedding venues are definitely going to want more luxurious high end finishes. And we feel like we can, with negotiations that we've made with other manufacturers in the space and working through some of the details with them, that they can offer a product for us and give us more capabilities to service those wedding venues with a higher end product with multiple different manufacturers with different styles and without having to bring manufacturing in house. And kind of where I play the biggest role in this thing is going to be the construction experience and getting sites ready, being more of a consulting role for the clients to have them prepped to receive the homes if they're going to be deliverable homes, or if they want to build on site, we can offer that product as well. So that they want ground up construction and all these to be fixed to their land, then we have the ability to do that as well. And so that's the area of the business that I'm really going to be heading up and I have the experience in that arena. So I love seeing something go from ground up to a finished product, and that's really the vision that I have with all of this company. And it took us, I don't know, Robin, how long did we work on this? 6 months to build the team and
Yeah,
finally feel good about the right team put in place.
probably since October.
Yeah. So, so we're excited to get to show you the offering, go through the numbers and the projections and the performas, and go from there. And then I'll let Mary introduce herself.
I'm Mary. I like to joke that I am the backbone of what I call Bob the Builder here. I joked with Beth last time about the last 8 years or so. He's been doing I've seen the not so glamorous side of the construction. And so bringing this project together has been, I guess you would say, a relief to know that we're doing things in a smaller with our partners. Lindsay and Miss Robin. And basically Robin and our role will be, of course, collaborating on all the various operations. And once again, holding up Bob the Builder over here. So I'm very excited to be to get on the road. It can never be quick enough. And I must apologize for the ear that's in here. I've got a needy dog and a grandchild, so I very much apologize for being all over the place. Anyway, that's it for now.
Perfect. Robin, do you have anything else that you want to add? Anything that might have been missed as far as introductions for the team?
Other than Chris is the one that spearheaded this whole deal, who we all kind of were thrown together. So he's the CEO of the group. So he'll be spearheading this, and we're just along for the ride to make it work. So other than that, no, I think do you have the slide, the pitch deck,
Yeah,
Beth?
I have the lender presentation. Sorry,
Okay.
didn't get that out very well. Yep, I can get that started. Give me 1 second.
We had a couple of different ones. So
Yeah, let me just share screen with you guys. All right, and then is Chris going to talk through the slides, or Robin, are you guys going to kind of tag team? What's the best way to go through the slides?
I'll go through it all.
Okay, just let me know when you're ready to go to the next slide and I'll bounce it for you.
Okay. All right. So first of all, I want to thank everybody for taking the time to listen today and go through our exciting project with us. We're going to be a Texas-based affordable housing distribution platform. We're seeking 1.2 million in a private loan at 10% return. Interest only. We want the loan or the return to the investor as an interest only distributions for the first 24 months with a balloon of return of all capital at month 24. We in our offering, we're not offering any equity in the company. We want to be strictly a loan based capital request. So it's just a pure debt instrument, and I think you'll see exactly why at the end of the presentation. Hopefully, everyone will be able to see why the loan's well protected after going through all the numbers and how we've got it structured. Okay, if you can go to slide 2, Beth.
Oops, did I go too far? Yes.
Okay, there you go. So at a glance, we've got 1.2 million as the loan at 10%, so $10,000 a month in interest, with 1.44 million returned to the lender over a 2-year term. What I feel makes this particularly compelling from capital protection is that 29.2% of the loan, or $350,000, is we're going to hold in a dedicated reserves account from day one, so that through the process and as we ramp up, and we wanted to make sure we built in a very viable ramps to secure the investors. But with that $350,000 set in its own account, we could essentially not generate any revenue for the first 24 months and still not miss any of our interest payments to the investor. Those are obviously not the goals, but we've structured it that way on purpose. So we have that in reserves to protect the investors' return, and also be able to provide the investors, biweekly updates or monthly updates, whatever everybody, would rather have, and go through that process without anyone being worried about whether those payments were going to be able to be made. So the with year one projections, the DSCR ratio is about 4.6 times, with an EBITDA of 555,000, and that's the difference between the $120,000 in debt service for year one with the $555,000 EBITDA. So it's covered. Even year one, we're covering we've got a good debt service ratio, and this loan's covered multiple times over, really. And slide 3, Beth, goes into why we chose this avenue and why the timing of it. So we feel the timing is important on this right now, simply because there's really 6 converging market forces creating real demand for what we do right now. The U.S. median home prices remain near record highs, and tiny homes, even if they're priced between $90,000 and $150,000, which is going to be kind of our market space for what we're offering, will serve a segment conventional builders don't really even pay attention to. So we feel like we're setting ourselves apart and not having to compete with conventional builders because they don't offer a product that we really can in this space. Short-term rentals and glamping demands exploded since the pandemic. There's over, and then with Lindsay's wedding venue space and her already built clientele, there's over 10,000 wedding venues in the U.S., and about 85% of those wedding venues lack on-site accommodations for guests. So we really want to focus on that market with her expertise as well. So we feel like, that's also another thing that we feel like Lindsay's going to bring to the table, is just the fact that she's got those relationships with existing venues that have already brought it up to her about bringing accommodations on site, and being able to service that industry we feel like is going to be very big as well. On top of that, a lot of the ADU legislations that it is expanding nationwide. There's a lot of people are really getting into adding ADUs on their property for rental income, income tax purposes, write-offs, those types of things. So that's become a pretty big market. I don't know exactly how far that's going to go, and if people are going to start not wanting those things, but I feel like there's a good opportunity there as well. And then on top of that, just the sheer fact that all of the baby boomers that are starting to downsize, there's a lot of growing workforce housing. There's a lot of young people that are getting into the workforce that can't afford to buy a traditional home yet. We feel like there's a big need in that space. We have another venture that's we're going to be able to supply homes into, but we're also developing a tiny home community, resort style community in Sherman, Texas as well. So that's going to help our sales into a direct property that we're developing as well. So there's another source of revenue for Halo Living in that aspect also. So that's why we feel like the market's right for us to do this right now. And slide 4. So we're going to operate as two different revenue segments. One being the dealer sales, or the manufactured units that are going to be manufactured by our affiliate manufacturers. These units are going to retail from 80 to 100,000 is going to be kind of our sweet spot, which 30%. So we're able to hold a 30% margin on those conservatively. The market right now, a lot of dealers are averaging 40%. I've put the pro forma together showing 30% to be very conservative. So if we're going to, on those units, we're generating $24,000 to $30,000 gross profit per unit. But we don't have any manufacturing risks. So we're not personally manufacturing those. We're able to place those orders and have them built to suit. But what the best thing about this for us is we get, without having to invest a lot of money in a manufacturing facility, we get to generate revenue with these units essentially day one. Our target sales, our target projections for year one is to move 30 of those units for 2.4 million in revenue. And then the second segment is our build on site segment, which is where my construction background comes in. And this is probably going to be more in the wedding venue space. We feel like where we can target multiple units on one property. We feel like majority of the wedding venues, at minimum, if they decide to build anything on site, they're going to build it at least 10 units per space, rather than just building one small unit per build site. It's going to be a much bigger project and a bigger revenue generator. Those units are going to average around $150,000, also with a 30% margin on those as well. Our year one target, we've also set pretty conservative on that at 15 units for 2.5 million in revenue. So together we're projecting year one at 4.65 million. And both of these really, they're really capital light. So in the building space and in the manufacturing space, we can require deposits for orders being placed, since they're essentially custom, without having to front a lot of money on the front end or put a lot of money in capital wise on the front end, without being able to and really exposing ourselves. So we won't have a huge receivables at any given time. So everything in this space will be essentially paid upon delivery, or deposits given up front to secure the order.
Chris, can I ask in just real quick, like turnaround
Sure.
time, if either, segment one, segment two, turnaround time, if, somebody does place that order and then you guys go straight to manufacturer, what does that turnaround time look like?
Right now, the manufacturers that we're dealing with are averaging about 2 months from order to delivery.
Okay, perfect.
And turnaround time on the build on site, those are going to be a little bit longer. So those are probably going to take 4 months from start to finish, with the first 2 months being really site prep.
Gotcha.
And there's a lot more pre-development that's going to go into that. So more pre-planning time than there is going to be actual construction time. The construction time itself is essentially the same, 2 to 3 months, but there's a lot more pre-development that goes into it, as far as infrastructure, utilities, getting the site prep to build those units. And then obviously, then we also have any kind of city or county permitting and approvals and that process to go through, just like we would with, standard construction.
Okay, thank you.
Sure. And the team. So we've all kind of introduced ourselves, but I'll give kind of a rundown on everybody's role and where we kind of fit in as the team. So the way we've structured it is we're all 4 equal partners, 25% equity partners each, which we felt is important so that there's not one person feeling overrun by the other or anything. We all wanted to go into it as a full team experience, and everybody have equal roles and responsibilities as a whole. I'm going to lead the construction and build on site operations. Mary's going to drive sales, marketing, and accounting and account management. And Robin's going to build the operation infrastructure and systems along with Mary, and those guys are going to tag team the back end. And then Lindsay, her role is pretty obvious in focusing on the wedding venue space, so that she can service her clients and our company at the same time. And slide 6 is our, so this is the use of funds and kind kind of money distribution on what the funds are going to be used for and where the 1.2 million is going to go. So 235,000 is going to cover our startup and all of our compliance and licensing facility. We've got to have a dealership location, which will be located in Texas. Setting up all of our banking, SEC filings, licenses, everything else. 240,000 is going directly into the debt service reserve. That's two full years of $10,000 monthly payments, held separately from operations, so that money won't be touched until after all the debt service has been completely paid back at month 24. 110,000 is additional operating. We just put a contingency buffer in, so any unexpected items that we have, we've got a little bit of a contingency buffer in for that. 366,000 funds our first year operating runway, payroll, just general operations. 89,000 is just growth and working capital cushion, and 160,000 is going to be our show models. So we're gonna have a lot that we're gonna put show models and have a place that we can actually walk people through units if they want to come see them and touch and feel them. So we've got to have some inventory for that. So based on that, based on the total investment, about 30 cents of every dollar of the original investment is going to go into reserves that are contingency funds and or our interest reserves that are going to be set aside for the investors. And slide 7. So this is how our capital preservation is going to be put together, and again, it goes back to how the investors are covered and how they're secured. So along with the 240,000 in reserves for interest, the 110,000 set aside for operating buffer, our overhead, we've structured it to be really lean at 70,000 a month or 840,000 a year. We're going to achieve that by not hiring really aggressively. We don't feel like we need to from the start. We really want to give ourselves time to generate revenue and cash flow before we put too many people in place. And we really need to get our systems and processes put in place at that time. Along that time frame as well. We've already negotiated with several manufacturers that are ready to go, and they're ready for us to start placing orders. So the best thing about that, and the reason we picked there's several reasons we picked multiple manufacturers to negotiate with, but one, we didn't want to be at one manufacturer's mercy if they are running longer lead times. But most importantly, our different manufacturers, we've chosen certain ones that offer a quality product that I have been through and vetted and wanted to make sure that we're giving a really top end product. But also they offer different styles of construction that we can offer multiple styles of that construction. Some are very contemporary, some are more classic, with different finishes in those as well. So we're not just stuck with one style of construction for our manufactured homes. Year one, the DSCR ratio is 4.6 times, which we've already been over. And the investors will receive full monthly financial reporting. We'll provide revenue, cash positions, how many units we've sold, reserve balances. Complete transparency is what we want to make sure we give to the investor throughout the whole term of the loan. So the way we put the revenue projections together, we did a very conservative option. We put our in the middle, you'll see our target and our expected revenue generation. And then on the right, we see if we exceed the numbers that we expect, then we've got a very high upside to it as well. On the conservative side, we put that at really that's 80% of our what our target has been. So, or what our target's set at. So the conservative side, if we move 24 dealer units in year one and only 12 build on site units, that will generate 3.72 million in revenue and 103,000 for net income after everything in debt service is paid back. The expected case, which is what our whole performance is built on, is year one moving 30 units and 30 dealer units and 15 build on site units at 4.65 million with 323,000 in net income. And then, of course, the upside case runs 125% of our targets. So I didn't put the performance together based upon high numbers. We even feel like our expected numbers are put together very conservative. And slide 9. So this is the 3-year financial summary that we've put together based on projections. The same things that we've really already looked at. But when we go into year 2, we've got 6.6 million in estimated revenue, 1.02 million in EBITDA, with 691,000 in net income. So this is also the year that we're going to be able to retire the loan and be able to pay the investors back in full. And then year 3 post loan, we've got 9.3 million in revenue and 1.5 million dollars in EBITDA. 1.2 million in net income is what we're projecting. Our gross margins are going to hold steady at 30%. We do feel like that 30% margin based on the market averages is also very conservative. So we expect to show a much higher profit margin after starting in year 1. But I would rather put this thing together very conservative and over deliver to the investor rather than over promise.
Absolutely.
Because I just feel like 30% is pretty. It's low for this particular industry, believe it or not, but it's a very achievable number. And so I would much rather be able to debt service than show if market average is 40%. It's somewhat unbelievable.
Mm-hmm.
Perfect. Is
And
that
then
last slide? Nope. One more.
Yeah. So the way that we've got it put together is pretty straightforward on the return structure. We've got 1.2 million at 10% annual, 10% a month, interest only for 24 months. Full $1.2 million balloon at month 24. Total interest earned over the term is 240,000 with 2% origination points of 24,000 paid at closing. So the total return is going to be 1,464,000 on a $1.2 million investment. No equity dilution, and it's just a clean debt as instrument. So with a good DSCR coverage. We feel like we've stress tested every risk. We've got if we have a slow sales ramp and we're moving, it takes a little bit longer to get our revenue generation. That's why we put the interest reserves in place. So that way all of our interest payments can be made to the investors even if we're not even before we generate revenue. If the build on site units take longer to get going and our pre-development takes longer than expected, we still have that revenue generation in regards to deposits and things like that. We also have not included in our pro forma any type of consulting role for that portion of it. So there's added revenue that's not put together in the pro forma, which also helps with this all being put together very conservative. And then on to slide 12. So at the end of 24 months, so there's a couple different exit strategies that we have. I think our ultimate goal would be to over exceed our projections and be self-sufficient after month 24. But we feel like we're going to have a strong enough debt service ratio to refinance with a conventional financing or go back into another private money position at that point as well, if we need more financing for growth at the 24-month mark. And I believe that's really all that I have to go over right now. I did also include, Beth, a full bio on the whole team. If you wanted to send that out to anyone interested or include it in the video as well.
Yeah, I'll definitely send out that as an attachment as well as the pitch deck that you just went through also.
Okay.
And of course, Lindsay's full video, and then obviously this recording and more bullet points on the opportunity itself. So does anybody have any questions on the pitch deck while I still have it open? Do I need to go back to any of the other slides to go a little bit more in depth into anything? Feel free to raise your hand, come off mute, whichever.
I'll say I know there's a lot of information there, and if anyone does have interest, we can always jump on another more private call with them and go over numbers in depth and work through that so we can see a little bit more. That was just kind of an overview, but
Yeah, we can definitely do that, and that'll be part of when the email goes out. Anyone who wants, more information or wants a little bit more one-on-one time with you guys, we can certainly schedule that. And this is, a little bit different than probably what a lot of people are used to with private money lending and your typical fix and flips or buy and holds, because that's such a smaller scale project, and this is an actual business acquisition. So a little bit different, lots of information. It was very thorough. Thank you for that, Chris. Oh, somebody's got a question. Go ahead and come off mute if you want to, Gab.
Yeah, this is Gab. Nice to meet everybody.
Yeah.
Thank you so much for that presentation. That was absolutely amazing. I did miss the first part of it and just wanted to ask, is this pitching for a modular home site, like similar to like Clayton Homes?
This is more of tiny homes. They are modular in
Tiny homes,
design.
okay, okay.
But it's more tiny homes, a little bit higher end finishes, kind of in the luxury tiny home space.
Okay, and so you would have those on site, kind of like what Clayton Homes does with their modulars, so that people could kind of go through them and, okay.
like models
Yes,
on site.
we'll have a location that will have a lot or a showroom, if you will, that you can come visit the homes. But we'll have there are other locations across the nation that we could set up. So if you need to go visit one that's closer to you, we have the ability to do that as well.
Okay, love that. Thank you so much. And then my second question is, what state are you starting in? I might have missed that in the beginning as well.
That's okay. We're based out of Texas, and we're in North Texas.
North Texas. Okay, thank you. I appreciate that.
We can service nationwide. Let me make that.
Yeah.
We can send them out anywhere, and we can build on site anywhere. So we're not just staying local to Texas. We can go nationwide.
Okay, this is great. Because I actually am, I offered on a piece of land. My offer got declined, but I'm looking to build tiny homes in North Carolina.
Perfect.
So
Awesome.
this is right on time. Super excited about this.
Great.
Oh, great.
And Gab, one of the things you may have missed from the beginning, but again, you'll get the recording, so you'll be able to kind of get caught up. But the fourth partner who wasn't able to join tonight, her name is Lindsay, and
Okay.
she is a wedding venue consultant. So she has helped wedding venues get up and running and operational. So now this is like the tiny homes on site is the next like layer and level of what she'll be able to offer to all of these venues across the country that she services and consults with. So it's a need that they have, and that's why they've partnered with her to bring that piece in too. So lots of exciting things, and the four of them coming together, and I think you were here at least for that part of what their roles will be. Just it's a great fit with all four of them.
Well, do you guys want to know a funny story?
Please.
Sure.
I actually am wanting to open a wedding venue. I did a lot of work with lenders. It was a $3.3 million project. And I was able, well, I'll just say that I heard that 90-10 was not good. I should have stuck with the 75-25 that they gave me in the first round of me doing the work with the lenders, but I did get them to 90-10. It was a huge project I did, and I kind of folded at the investor reach step. So that is something that I am looking forward to doing in the future, but I'm very familiar, and it's definitely a hot commodity. So great work there too. I'm excited to see how that works.
Yeah,
Thank
that's
you.
great. We need
And maybe
to.
you guys will be helping me with my dream because I've already been
Absolutely.
down this road.
Yeah, we need to jump on a different call.
Yeah.
Yeah,
For sure.
very good.
Awesome. Anybody else have any questions? Again, you can either come off mute, raise your hand, whatever you prefer.
You want to get back in here?
Yeah,
How do
I
you
have a couple. I just say I have a couple.
Okay.
Natalie?
Yeah, so when it comes to the manufacturers, like, are these manufacturers exclusive to tiny homes, or do they have other products that they produce?
The manufacturers that we have one that is tiny homes only. We have another that they do both. They do tiny homes and they do a true modular or HUD model home.
Okay. And so, using those two, and I know you've checked out the quality, but like how or what is the plan for like maintaining the quality, right? Like of having, yeah, you always have those great expectations. It's like getting a cleaning lady, right? Like the cleaning lady works great for a while, right? So, yeah, so kind of, yeah, what's the plan or what's the expectations for maintaining that quality?
Yeah, so I'm pretty particular after going through what I've been through in the building business and dealing with the clientele that I've gotten the pleasure to deal with in the past on the higher end luxury. So, but when we went through the process to choose the ones we wanted to work with, it took us a long time. We visited a lot of different manufacturers. We walked the facilities, we looked at their process, we looked at their systems, we looked at the products they used. And that's ultimately how we ended up with making the selections that we did. But the other thing that we did is we actually chose people that are pretty local to us to ultimately work with, so that if I need to go to the site to inspect something, it's not unreasonable for me to get in my truck and go there. I can get there to both manufacturers within a reasonable drive time, and be able to do a little bit more quality control than just hoping things come out the way that we expect it to. So we plan to inspect that pretty regular, or I do, because I have a level of expectation with a product that we want to put out. So there's going to be some learning curve with that. And to answer your question, I don't know exactly how that's going to go. You know, it's like just like you say, everything's good until they're not. And so we are also actively looking at other manufacturers that we want to work with. We've got two selected, and we want to expand that as well, so that if we ever do have a problem with one, we can make it an easy shift, or we can go ahead and add. I don't think we're limited to how many manufacturers that we work with. I don't think we want to be too flooded with different options,
Oh,
and
absolutely.
I
Yeah.
don't think I
Mhm.
want to have clients that come in. You know, I've been torn on that a little bit, because I don't think I want to have clients that come in and we just have thousands of different options for them to look at. I want to have a kind of a
Mhm.
streamlined product that we offer. But if the right manufacturer comes along and they offer the quality of product that we expect and that we want, I don't mind adding someone else in. I just don't want to be the guy that hands someone a catalog of 5,000 different homes to choose from.
No, I totally agree. It's kind of like going into a restaurant. I want you to do the best thing. I want you to offer me on the menu the best
Yep.
thing that you do, right? And stick with
Yep.
what you do. So, yeah, totally get it. My dad did mobile home and modular home sales, so it's kind of funny.
Oh,
So,
really?
I used to, yeah, go to work with him and clean those things on the on his display at his display look. So it's so funny. But
That's
but
interesting.
also, yeah, so so I'm very familiar with that
Yeah.
business, right? So, but what about max capacity? Like, because you're not the only person placing orders, like, is there, any concerns or any limitations on their capacity that they've given to you for this piece of work?
No, both of the manufacturers that we've dealt with have the ability to deliver 5 to 10 homes daily.
Okay, perfect.
Now, one of them is kind of running just a little bit below their capacity right now, and one of them is running at about 50% capacity. So, um, I feel like we've got plenty of room for our expansion with those guys. But that's also why we want to add, one or two more manufacturers onto our list as well.
Sure. It's always good to be able to, yeah, move that. I also worked for Wendy's and we had to have our suppliers, right, lined up should the chicken need to be the same quality in from a different vendor, right? So
Yeah.
totally, get those kind of things. But when back to my manufacturing home, so from the delivery and setup perspective, when they are the dealer option, who's going to be taking care of that from the delivery and setup side?
I'll be dealing with consulting the client on site prep to be ready for the delivery of the home. The manufacturers actually have delivery and setup contacts, and it's just the services are provided. The delivery companies typically offer the setup as well. So we have
Mm,
established people, and that the manufacturers refer us to for the actual delivery and setup. Depending on the size of the order or the nature of the order and the nature of the site, there'll be certain scenarios that I'll be on site to oversee that process. I think it's going to be a per case basis. Um, but we definitely will have somebody, a rep from us that is probably going to be on site to oversee it at some point, either whether that be prior to delivery to make sure the site's prepped and ready, or the day of delivery.
okay. And now, are there any states right now that are off limits? Any
No,
restrictions in any states? Okay.
no.
And what about, so then I want to flip to the on-site build. And
Hmm.
what about location terrain differences? I'm in the mountains of North Carolina. So,
Yeah.
and they build on the side of the mountains, right? So I'm wondering about obviously, and I actually just bought 25 acres on the side of that mountain. And guess what we're planning on doing? 6 1 bedroom, 1 bath, tiny homes. So,
Oh, nice.
so yeah, so that's kind of what another reason I'm asking. But yeah,
Sure.
that terrain is definitely not your normal terrain. So any considerations or extra considerations? Yeah, slope. Yeah, it's a slope for sure.
Yeah.
Um, uh, Considered in those costs, or are there adjustments for those kind of things?
There would need to be adjustments for that, and I think that's where it's gonna come into the more custom side of every site visit. And when it comes to consulting for those sites, the consulting portion of it's going to require a site visit. unless a photo shows that it's just a flat site and there's utilities readily available. So that's definitely going to be one that I would say, yeah, we're going to have to meet on site and we're going to have to evaluate it and probably get some other local people, whether that be surveyors, different topo survey stuff. There's going to be more to it when it comes to
Right.
that, but can definitely consult in that arena or take it as a turnkey solution. And that's where we want to go with this. We want to offer, we're gonna have some clients that we run into that do know what they need to do, and they are experienced in
Mhm.
the pre-development portion of it. So I want to offer, and as far as our business goes, I want to offer kind of three tiers. I want to offer, okay, we can give you a list of the things that you need to be ready and prepped for before the delivery of your tiny homes.
Mhm.
Section two of it, I want to offer, okay, we'll give you the list and I can walk you through those steps and get you set up with the right people that can perform those tasks for another package. And then the third package being, okay, you want me to handle all of it, I'll handle all of it.
Sure.
Done for you.
Okay. Yeah, I just know the terrain here, and obviously there's people who do it all the time here, building on the side of the mountain, so they obviously have that experience, and you're like, how did they get that house up there? So, but yeah, so wondered how that would factored into the build on site, or even the delivery for that much matter. But yeah, okay.
Good questions.
I think
Any other
as I was
questions?
scribbling down, I think I captured all of mine. But yeah, thanks for the answers.
Absolutely. Thanks for asking the questions. We love when people are engaged and interested in providing input. So thanks for speaking up. Does anybody else have any other questions? Oh, we just lost Chris and Mary.
Yeah,
Yes.
they just had a big lightning strike and killed their power. So
Oh
they
no.
may jump back on in a minute, but maybe I can help answer some questions in the meantime.
Yeah, well, I was just going to kind of go into the fund and like and
Mhm,
like how the capital is being raised because I know Chris touched on like the overall goal is the
mhm,
1.2 million for
mhm,
the entire project for 2 years. But with us going through the company that's called Grow It, who creates the fund, helps with all of the paperwork, does all the legalities for us, works with self-directed IRA companies to get documents just how they need to be. We have the ability to raise the capital more so in portions and gradually instead of this project needs 1.2 million and we need to close in a month or 4 days 6 weeks whatever it needs to be. We have the opportunity to raise the capital in increments to get us to individual milestones. So that 1.2 may sound like a really large number, but what we're looking at in actuality, Robin, based on our call earlier today, is 400,000 about every quarter ish would get us where we need to be in to hit that 1.2 million. And we have the ability to do that through the fund. Some of you may be more familiar with whether it's a fund or oh gosh, I just lost my train of thought. What's the word, Robin?
Syndicate,
Syndication.
reserve, yeah.
You might have heard syndication fund. It's basically the same thing. And I can actually send out the recording from where I had Lucas, who's the owner of Grow It. He was on a Private Money Monday several months ago, and he actually talked through the process and answered a lot of questions about what funds are, syndications, that kind of thing. He has multiple levels of SEC clearance. So he knows exactly how the documents need to be written, how the lenders are going to be protected, how the borrowers are protected, how everyone comes together to raise that capital without it all being front heavy. That actually costs the partners more money because they don't need all of it yet. So it gives them the ability to raise that capital in increments. So does anybody have any questions about that, or Robin, anything else you want to add as far as the fund or syndication, and how we're going to go about raising that capital?
The only thing I can think of right offhand is we're looking to try to close this by the end of the month, at least for the first portion for startup. And if we do need 1.2 million, but we need it by, 12 months from now. We need it for sure going into year two. But if we could just break that down into quarters, so 400,000 every quarter, um, that should suffice. We do have a business model and a business plan too that we will be sticking to. So if someone's interested in this, we can show the play by play on that business model month by month. But Chris, do you have anything to add to that? Right offhand, do you think we would need that 1.2? You're muted, but 1.2 prior to month 12? Do we need it in month 9?
Um, no, probably month 9.
9? Okay.
Yeah, or month. I really think as long as we had it by month 12, everything would be fine. So,
Okay.
I mean, I think quarterly would work fine.
Okay, that's what I was thinking too, based
And
on our business
and
model.
it's very similar to, I know we've put the numbers and everything have been put together based upon a 10% return. If by breaking that out into a quarterly raise, then if we need to look at that in a different way, whether that be a higher percentage rate of return, then we're definitely open to that too, Beth. So
Perfect.
Or maybe points at the end.
we put the project together conservative enough to be flexible on some of the terms as well, I guess is where I'm going with that. So if there's some interest and feedback and we need to look at those a little bit differently, then that conversation.
Perfect. Does anybody have any questions about that, about the fund or syndications, and kind of any more, like, do you need more details about how that works or how the capital raise works or anything like that? Perfect. Easy enough. Yeah, Keisha will, or Kesha, sorry. I will make sure that you get the recording, so that you can see, because I know you came in, I think, closer to like 9 o'clock instead of 8 o'clock Eastern. And you had mentioned earlier that you were in some meetings and things like that. So we appreciate you, of course, jumping on.
Oh, I'm so sorry.
No, no,
I
no. We
didn't even
appreciate you
know.
being here.
I think I thought it started at 8 and I'm on Central Time, so I apologize about that.
No worries. You had said you had meetings and things like that, so not a problem at all. You'll definitely get the recording. So we went through, we introduced all of the partners. There's 4, talked a little bit about their role. So all of that will be, in the recording, and then I'll have a lot of information too in the follow-up email when I provide the recording to everyone. So, but if you have
Thank you.
questions at all, I mean, we're happy to answer any questions. But Chris did definitely go in depth into all of the business information and what that looks like. And once you watch the recording, if you have additional questions about the business plan, we can certainly hop on, some one-off conversations and one-off Zooms with the partners to talk through like where there might be a missing link or any questions that you might have.
Okay, perfect. Thank you. Yeah, I'm sorry I messed up on the time. I didn't know that was Eastern, so I apologize.
No worries at
You're
all.
fine.
No, you're here. We appreciate it.
Just
Thank
to
you.
sum it up though, Kesha, we are doing a tiny home dealership. We're custom delivering tiny homes to parks, to people's homes. And then we also have, it's a hybrid model. So the other part is where we're going to actually build on site. And we have another partner that's not here tonight, but you'll see the recording with her. And she's a wedding venue consultant, and she's been one for over 15 years, has a very established business. And a lot of her clientele want tiny homes either built on site or delivered on site for their wedding party to stay. So that's one vertical of our plan. So
Awesome. Thank you. And I'll go back and watch the recording too.
Yeah, and if you have further questions, we can always hop on another call to be more specific. So,
All right, perfect. Thanks.
mhm.
Perfect. Anything else, Mary or Chris or Robin, that you guys wanted to make sure we touched on that maybe we didn't get to?
I don't think so. Other than, anybody that wants to or needs to ask other questions, get on a call. We're always happy to schedule that. So, and I can, I don't know if it helps you, Beth, but if people want to get on a private call to ask questions or get more information or get a little more detailed, if you want them to schedule that through with you, and you coordinate that with us, or if you would like me to provide a Calendly link or something like that, I can do that.
Okay, yeah, we can figure that out. Typically, I just oversee that so I know like who's involved and who needs the follow up and then where we
Yep.
go from there so that when we get to the point of like doing documents, if somebody decides they want to raise their hand and be part of the lending team, then that way I know like who's who and what their budget looks like and what they're interested in to go ahead and get documents started and things like that. So I
Sure.
certainly don't mind keeping that, under my radar and kind of overseeing that.
Okay.
I'll say this
Sounds
is a
great.
great opportunity to jump in on a business like this because as we've talked, we've had several people already say, well, I've bought land here, or I know someone that has a park in Texas that's going to do here. We have our own park that we're working on that we're going to put these homes in. So we all know someone that has a need for it. So that's why we're looking for investors who want to jump in on this with us to help, play a role in providing these for other people. So would love for y'all to have, be a part of the ride with us. It's going to be a good company. We're excited about it.
Yeah.
Yeah, it's very true. Like where I'm at's very rural, and the places that do the rural venue, they actually
Mhm.
do offer exactly what you're talking about because it is out in the middle of nowhere.
Mhm.
But yeah, I also just thought it was would be a great idea to actually kind of make it more, I don't know, like you're having a big family reunion, right? Kind of thing. And once the event's over, it doesn't even have to be a wedding, right? It could be
All right.
any event, 80th birthday party, whatever, to be able to know that then you still can go back to your own separate places and not have to drive, an hour away. I think, yeah, it's very appealing to that experience
Mhm.
thing that happened after COVID, right?
For sure. Yeah.
Funny story. I have some family who was running a handy house dealership during COVID. And of course, their sales just skyrocketed because kids were coming home from college and the parents didn't want them in the house, or, older, parents and things like that needed a little bit more, oversight. So people were getting these handy houses that were meant for, greenhouses and she sheds and he sheds and all the things. Doing very, very well during COVID. And now it's like, gosh, there's so much opportunity to do the same thing. But, workforce housing, I mean, I'm in Savannah, Georgia, and workforce housing here, there's a huge need because I think it's like not even 40% of this market in Savannah can afford a one bedroom, one bath apartment.
Oh yeah.
So to have something that actually, is more freestanding, it's on somebody's, it's in their backyard, it's in their side yard, or there are two or three opportunities to have a space to call their own that, doesn't cost an arm and a leg. And it, just it offers these opportunities for people who may not have other opportunities to have, a roof over their head, somewhere to cook a meal and things like that. I mean, there's just so much opportunity for it. So I'm excited for you guys.
Yeah, we definitely see the need for that. And we're trying to solve those problems. Yeah.
Definitely.
Hopefully we're the solution.
Definitely. And I think we talked too at the very beginning of the call, kind of before we got started, talking more about like the sober living opportunities and things like that. I mean, there's just so many niche opportunities, and every market could very well be different. I mean, it could be that one is an area where it's the wedding venue, one's the area that it's the workforce housing, one has an area that's more so directed to the silver baby boomers and things like that. And then there may be, more of an opportunity for the sober living and things like that. So it's just so diverse, and I'm excited for you guys.
Thank you. We are too. I'm excited that y'all are even on here.
Yeah.
We're ready to get started. So
Well, hopefully we'll get that
unbelievable.
first 400 before the end of July. So we have about 3 weeks to go. So of course, anyone on the call, anyone watching the recording, by all means, reach out if you want to jump on an additional call to ask a little bit more about the opportunity, so we can get this at least first kind of flow knocked out here in the next couple of weeks, so we can get you guys started. That would be exciting for sure.
Sounds great.
Yeah.
Appreciate it.
Thank you so
Thank you,
much,
guys.
Beth.
Absolutely. Honored to have you guys here, and I'm looking forward to it.
Thank you. We are
We
too.
are as well.
Alrighty. You guys have a great night.
Thank
Okay,
you.
thanks everybody.
You.
Bye.
Bye.
Thanks.
Bye.